Our next guest is an investor who has already dumped Netflix. Erick Maronak is Chief Investment Officer of Victory Capital Management, which has about $2.5 billion under management. And he sold his Netflix shares earlier this year, but still keeping his eye out for a potential turnaround. Erick, you bought at $80, and at one point, Netflix made up about 3% of your fund. You said you trimmed your position by about half at 205, and then you sold out of Netflix at 190. So clearly you saw a lot of problems here in Netflix before everyone else did.
Well, I don't know if at the time I would consider them problems as opposed to increasing risks against a 45 forward multiple. So it became a little tenuous, and we felt it made sense to back off, see how the company did, and it's been a little interesting since then.
What would it take for you to get back in?
Well, we'd like to make sure that the business model is still intact. I don't see competition really taking away their subscriber base. Amazon did launch a competing service, but it's a very scant list of titles. So the question will be sub-growth, which has been the driving force behind the multiple expansion, and it will also be on the content side. You know, what sort of dilemma are they currently in?
So if competition won't take anything away right now, everything they've done to trip themselves up has been on Reed Hastings' part, on the company's own part, rather than from outside.
Sure, and companies will make mistakes along the way, but those are moments that you can actually use to give you some sense of how good management is at overcoming adversity. So a 3-month flirtation with Quickster, put to bed. They're listening to their customers. The question will be how much damage did they incur in the seasonally slow periods in the summer, and what sort of guidance we get in the quarter.
Now, one analyst says that the lower Netflix's fourth quarter guidance is, the better, because they should really use this opportunity to ramp up marketing to bring back some of the customers before they lose faith completely. Does Netflix need to reset investor expectations right now?
Well, I would agree with that consensus view right now, that they've already incurred quite a bit of damage this summer. It's a great time to reset expectations, be very conservative, but at the same time exude confidence.
Okay. Reed Hastings had said that he was looking at data showing new customers preferred streaming over DVD coming into their mailbox, while most customers saw the online streaming as kind of a free add-on to their DVDs. Did Netflix and Reed Hastings kind of lose sight of what their customers really want at this point?
I think for the moment they did. When you really think about Netflix, what they're selling is really convenience, a convenient way to see movies, whether it be by DVD. If you're comfortable with that, that's fine, it comes to you. Or I think the increasingly popular option will be streaming, and over time DVD will go away on its own. So it didn't make sense for them to launch 2 competing services where you have to manage 2 different queues.
One quick question, how many subscribers will they have lost then at the end of the third quarter?
Oh, that's a big question. I'm sure they lost quite a few. I mean, it's a seasonally slow period, and also you have a lot of churn attributable to the free trial.
All right. Thank you so much, Erick Maronak of Victory Capital Management, the Chief Investment Officer there.